All right. Good morning, ladies and gentlemen. Today is Wednesday, 9/16/2020, and I'm back with another edition of the live show. And got kind of a different dynamic going on in the market right now. We've actually had a little bit of a dip in the overall market, and as you've probably noticed, we have a few new open trades. And the pending trades list has started to populate with some new names. And so, everything with the system sort of works on cycles, right? Everything's based on the market cycles and the system itself, as you know, everything on the back end is fully automated. And so it's kind of interesting because over the couple years we've had this new system out, it never ceases to amaze me how it has its a sort of a mind of its own, obviously, since it's fully automated. But it's just really interesting how everything seems to be consistent with what really makes sense as far as swing trading in the overall market. So, with that said, this is what I mean. So we've had a little dip here, and then we've kind of the market itself looks like it's sort of tried to bottom out. You got this pivot low here. Now there was a trend line break and a few other things. A few other things, there's a trend line break, but the S&P held the 50-day moving average. Actually, all of the indexes basically kind of traded down to the 50-day moving average, which is that red line, and trying to bounce off of it, right? If I'm not mistaken, the Qs had a close below the 50-day, but sort of bounced right off of it. And so the Dow never quite made it down to the 50-day, but came down close to it. You can see the last couple of times the Dow got down to the 50-day, caught a little bounce off of it. So the market looks like it's attempting to form sort of a cup pattern, but as you probably know, today is Fed Day. And so on Fed Day, usually the market's kind of dull in the morning. And then once Powell gets up there and says that they're going to hold interest rates low, for the next few years or whatever. Unless he says anything that spooks the market, which is entirely possible. See it all the time. The market, market's acting like it wants to go one direction or the other, and then on Fed Day, that can often mark sort of a turning spot. So theoretically, when I look at the shorter term charts here, it's kind of a constructive pattern. Um, the futures actually have more of a bottoming pattern going on, but this is kind of a bottoming pattern on different time frames that you look at. I don't know if the 5 minute can't really catch it, especially with the gaps in that, but the the futures look a little smoother as far as this kind of big bottoming pattern here. So, but here's the thing. Let me go to the SPX here. Um, 34.25, even 34.30 is really what the market's going to need to pop above. So, and there's every possibility that it fails up here, right? You can also look at this as sort of a big point of resistance, right? So there's no telling, but anyway, it is what it is. But generally speaking, this is you see this on a stock, you get the sell off, you get sort of the low point and it rallies back up. So it's not really an inverse head and shoulders, but in a way it is. And so this is typically like on a stock, this would honestly be the type of pattern that we would look for as far as like, a stock in an uptrend has a sell off, bottoms out, starts coming back up, and we'd look to sort of jump on board as it cups back up, right? So obviously we don't know for sure that it's going to cut back up. So there's a lot of resistance here, but we're talking about the overall market here, which is basically a function of a handful of big cap stocks too, so you got to keep that in mind. But anyway, so like I was saying before, moving on to the actual system, um, when we were here a week ago, there wasn't a whole lot to look at. There's been the one open trade in Honeywell, right? Which interestingly enough, this trailing stop hasn't moved since the gap, right? If we go to the open trades and we look at Honeywell, which is the oldest one, you'll see the trailing stop is still sitting here at 163, which is this was actually the gap that was formed by Honeywell getting added to the Dow, I believe. Kind of interesting because the entry trigger was way back here in like mid-July. So very constructive pattern though. Looking pretty good. So anyway, without further ado, let's jump into, I'm going to kind of try and go quick today. Let's jump into the open trades here, starting with the one that's triggering today, which is ENPH. Let me pull that up real quick and see what we got here. Yeah, this is actually a pretty good, I marked this up last night after the update, and I thought to myself, well, this is a pretty good example of a few things, right? One of which is if you watched the show last week, you'll remember that it hit the pending list with the trigger price all the way up here at the highs, and I went into a little brief description about how that works, about how a lot of times a stock will hit the pending list and the trigger price will be like way far away, and then as time goes on, the trigger price adjusts down to meet the price, theoretically at a lower price when it's turning the corner and going back up. However, if the stock keeps going down to a certain point, then it just drops off the list and never triggers, right? So, and that's another reason that that ideally and theoretically the system wants to see a close over the trigger price, right? Because that way we don't get faked out like on little intraday false move above the trigger, like maybe this day, you'd poke over the trigger price and then it would fail and then just keep going back down. But anyway, long story short, so this one's triggering in today. There's last week's trigger price. 1 week ago today, the trigger price was up here above the highs, and then as the week, progressed and this price came down, you'll see that the trigger floated all the way down to 70.25, right? And so I'm just going to leave that line on there for now, but I'm going to take that off. So anyway, that's what you got. So the trigger price floated all the way down to 70.25, and then of course, yesterday you got that big sort of, well, it was a big gap up, and then close above it considerably. And so the idea is that this is triggering in this morning, at the open here, which is somewhat significantly above the actual trigger price, right? So let's see. Today's open 72.60. So that's $2.45 more than the trigger price. So what do we do in that case? One of two things. Take a half a position, set the other half for the actual trigger price, right? Then you take a smaller position, but as I've mentioned frequently, a lot of times they'll, stock will gap up like this and just never look back. And so to compensate for that, what we do is we go ahead and get in anyway, even if it's just with half a position, which isn't a bad idea when you have, a significant gap, right? If the gap's minimal, then it's not a big deal. But so anyway, basically, all you got to do to compensate for that is, and I'm gonna, we never really named this, but adjusted target. 78.60. Did I do that right? 45. That was 78. 45, something like that. Anyway, just trying to do this off the top of my head, but so there you go. And I mean, that's literally all you have to do. So in the past, we've had numerous people have kind of emailed me sometimes when they first join, and they get sort of hung up on trying to get in at the exact trigger price, right? Which sort of makes sense. I mean, when you first hear about like a stock trigger, price or whatever, it sort of makes sense that you would want to get in at that price. But the idea is that, excuse me, that's basically just like sort of the level to beat, right? Like the stock has to. It's almost like, well, obviously, it was sort of a resistance level, right? It was the resistance above all these sort of highs here that were being put in. And so since the stock was able to break through and close above that resistance, well then has a much better chance of actually going and turning the corner and cupping back up, so and continuing the rally up. And so anyway, there you go. Not a huge big deal. um it's kind of a significant gap over the trigger, and so like I say, a half a position there wouldn't be a bad idea. All you got to do is compensate for it by adjusting the target. As far as the stop goes, I wouldn't necessarily in most cases, I wouldn't necessarily recommend that you adjust the stop, especially the initial stop. But the funny thing is, on a case like this, um, you can see how the initial stop was like sort of right under the low of that down bar, and so I'm gonna honestly say that and I don't want to move that permanently, but I would honestly say that this, under this scenario, like if you just decided to go ahead and take this one this morning at the open, you'd be just as well off putting your initial stop under the low of that bar. So anyway, I expect that if this were to close up here in this area, I would almost expect that stop to move up, kind of under the low of that bar anyway. So it is what it is. But yeah, so this is kind of an interesting example, and so basically we see this all the time. And I've had a couple of people over the past couple of years that have told me that what they do is they just go ahead and set a limit order at the trigger price, leave it there for a couple days, and either gets filled or it doesn't get filled, and they move on. So I mean, it's a viable concept too, but you have to be able to look back at this if it just continues to go up. It was kind of a missed opportunity. If that doesn't bother you, no big deal. Let's move down the list of open trades here, because last week we only had one open trade, and as we sit here now, we have four, right? So anyway, SE, this is kind of an interesting one because same sort of thing yesterday. It triggered in yesterday morning. On Monday, it closed over the trigger price, and so it kind of gapped up and then went down, you know, right into the trigger, and then by the end of the day, it rallied back up, which is kind of interesting. So if you had used that split position idea strategy, I guess I should say, um, then you got filled at the open, you got filled at the trigger price, and so your average cost would be probably somewhere right around where the price is now. Good looking pattern though. That's this pattern right here is very similar to this little dip pattern here, where run up, little dip, right back up, and over here, this one was kind of similar too. This was a little bit deeper of a dip, and then of course it gapped out of it, but it's just a really nice looking chart. This dip pattern over here was a little bit different. This was more of a the first dip and then a bounce and then another dip and then big rally. So anyway, this is very powerful stock, right? You can see this thing's just been on a tear. And so this little sort of dip and consolidation here, in a couple inside days, and that's got a lot of promise, basically. It's a good looking stock. Nice dip there and coming out of it. And so as long as and not a whole lot of risk either. And so basically as long as it doesn't take like a double dip like it did back over here, then should be looking pretty good. So interesting, there's a little gap right there that it didn't quite get closed, but extremely powerful stock. And you can see in the past, each time that it's had a little pullback or whatever and starts to come out of it, it has a tendency to rip higher. So that's got a pretty good look to it. Next new open trade is this DHI. And, last week I also used this as an example of a real good example of, like, how things are supposed to work with the system. And so that's what all these lines and drawings on the chart was my explanation from last week about sort of, how things work. And amazingly enough, and so I believe that this would have been where the trigger was sitting last week, right? And it was, significantly, well, let's see. So there was, yeah, and so let me just back up here. And you can see that, so when we're here last week, I'm going to need to extend that over a little bit just to prove my point. Let's see if I can get it right on the day. I keep struggling. There we go. So, we come in here last week and I'm explaining how, the stock has a pullback, and then, and I'm not sure exactly where the original trigger was when it hit the pending list, because they hit the pending list, and it starts off with a trigger that's typically well above the current price. And then, like I mentioned last week and again this morning, is that the trigger price will float down along with the price, sort of on a daily basis, depending on the price action. So anyway, last week, you were looking at this, and it looked like the stock was sort of selling down, and the trigger was way up here. So fast forward to this week, and the trigger itself, that trigger price, actually floated down to 71.75. And so this triggered in, closed above it, triggered in yesterday. You can see it was another case where it gapped up a little bit, actually traded down to the trigger price. So usually like to see that. For those folks that do actually like to go ahead and get in, boy, that's sometimes these things are stubborn, the drawing tools on this. But so, you folks that like to get in at the exact trigger price, well, there you go. Perfect opportunity. And, quite frankly, there's nothing wrong with that. Like I said before, if you want to set a limit order at the exact trigger price, get filled, then of course all the numbers are going to match up real well in the data tables with your actual position. But I wouldn't get too hung up on that, because some of the biggest gainers that we've seen over the year, didn't always trade at the exact trigger price, and so it's all a matter of preference. I left this on here because I'm gonna change this to where the target goes. DHI is a home builder, by the way, and so the target on this is 75.50. It looks pretty doable, quite honestly. Let's see, 75.50. Raise that up a little bit more. So sometimes when I'm just marking these charts up and drawing stuff on them like this, it's not always everything's not always exactly exact. Now, if I want it exact, I can zoom in. Whoops. Zoom in, and there we go. Put it right on 75.50. So, and again, just to reiterate, Trigger was 71.75. Open was 72.63. So you could basically, basically put the trigger up to compensate for that if you wanted to. And like I always say, generally when they work out that little bit of an extra gap. See, obviously, ideally, the every stock would open at the same place that closed the previous day, and that would make things, real nice and easy for, certain systematic techniques or whatever. But unfortunately, the market it's not the way that the market works, and so stocks, they gap up, they gap down, the market gaps up and down. Nowadays there's overnight trading and pre-market trading and all that good stuff. So, um, theoretically, in theory, like you could get up early in the morning before the market opens on a day that something like this triggers in and see that, you could actually buy the stock at the trigger price, which would be completely valid because, I mean, that's the idea. As you know, when a stock triggers in, it hits the open table like the same night that it triggers in. Excuse me. After the update, it goes on to the open trades, and I'm gonna say, like, very, very rare that a stock will gap down and not trade at the trigger price the following day. It happens occasionally, but it's very rare. And in which case, as I've explained previously, it simply drops off of the list. But that's why we go ahead and just put them on the open trades right away. So anyway, what I was saying is that it's entirely possible that, yesterday pre-market, hey, you could have got in at the trigger price instead of that little gap up at the open. But the market just, the market is what it is. Obviously, the system has no control over where a stock opens the following day after it triggers in. So, but anyhow, what's happening here is actually, kind of consistent with what I had drawn last week, right? As you recall, last Wednesday, just like on the previous chart when I zoomed out, last Wednesday this stock was still, kind of falling and in a downtrend or whatever. And then I didn't move any of these lines since last week. I just kind of mocked it up as this current, pullback and then reversal as something similar to, what happened back here, right? Actually, it would have been like that. Stock pulls back and then sort of turns the corner, and we catch it on the way up, and it's basically what's happening here. Nice pivot low right there. That's a beauty. This was more of a pullback and then a little sort of basing out pattern. This is more of pivot low reversal, but same sort of concept. So, generally speaking, people think of swing trading as, catching the swing back up after a pullback. And so if you go to the documentation, like the strategies page, you'll see that those graphics on there that, basically, explain what a swing trade is and sort of show it graphically. So anyway, looking pretty good on DHI. Any way you slice it, headed in the right direction. There's some upcoming resistance here. It's kind of going to run into a little bit of resistance here at this point. But that target looks entirely viable, and even the adjusted target, just a little would be a little bit above that. So, last but not least, like I said, there's only 4 open trades now. Is our friend Honeywell, which this one, this is a good example of one that never traded at the trigger price, although it came close. This low right here, and in Honeywell, kind of a big behemoth stock, but excuse me. So it triggered in on a gap, floated around, pulled back, never quite traded the trigger price, although it was very close. The trigger price was like way, way back here. And, this is another good example of. I find it interesting. Over the years, I see this a lot. Like when a stock when a stock like breaks a certain pattern, right? Like this was kind of a, this was a trend line. And so, I mean, a lot of people probably might have jumped in on this right when it broke that trend line that day. And so that may account for the gap up. I don't know. It could be earnings or it could have been news or something else, but I'm pretty sure. And this was another really nice little pattern right here. At this point here, this was it was like sort of a textbook little falling channel that it broke out of, and I'm gonna guess that this gap here is when the news broke, because they when they decided to add Honeywell to the Dow, basically, they announced it and then it happened is the way they do it. So it happens really quickly, put it that way. So anyway, it is what it is. And right after, basically after that gap, that stop moved right up to the underside of that and it's just staying there. So this day here where it like popped up sort of out of this, if there would have been any follow through to that to the upside, then my guess is the stop would have probably gone up. But as you can see, turned out to be, perfect place for a stop because 163 is, it's just below all the lows of this. And so it's a great stop to protect the profits and keep you in as long as it stays above that gap. So anyway, looking pretty good on that. So now that the market's had a pullback, and last week Honeywell was the only open trade, we got a few new ones added to it, and more importantly is the pending trades list has started to. You can see when you hit the pending trades list, anything that's triggering off the pending trades is going to show up right there. And it's only going to be on there one day, obviously, because today's the day it's triggered in. But you can see EMPH. This is the average range is basically the monthly ATR, and it gives you some idea what to expect from the behavior of a particular stock. On certain stocks have a very small ATR, say like 2% or something like that. And so, they're going to be slow and dull and relatively boring, but you start getting up, over 5% average daily range and you can expect some pretty decent action. And so it's certain times when there's a whole bunch of, say the market just, started ripping higher today or whatever, and, four of these things all triggered, and you're already in a couple of positions. Well, then, some of them, depending on what you're looking for, you might go with the ones that have the higher ATR if you're looking for some quick big moves or whatever, or if you've been waiting for an opportunity to to get in Microsoft. Now, Microsoft, percentage wise is going to move a lot slower. So anyway, let me just sort of, speaking of Microsoft, it's kind of interesting to there's some pretty good looking stocks on the pending list right now. So we just jam through them real quick, and I like to do this and sort of keep my eye on it. This ZS is this just hit the pending list, right? But this has been one of those super powerful, it's probably like a SaaS stock software or whatever. But yeah, this is setting up for, sort of well, it's already pulled back. It's setting up for sort of I don't even know how to draw it on here, but kind of bottoming out here and then turning back up at some point. So that's got a good look to it. It just hit the list, and so it's not the trigger price is not really that important right now, because ideally you'd see a few days, maybe the rest of the week, of some narrow range bars, and then it would turn back up. So NEO, frequently This is not the greatest looking pattern here. So a lot of times I will go through the pending list and sort of pick out a handful of the ones that I think have, the nicest looking patterns, and then I'll look at something like this and say, not particularly fond of the way that this is sort of a topping pattern. That doesn't mean that it can't sort of base out and then turn the corner and rally back up to the highs. I mean, it happens all the time, but I can just sort of see that the big move in this came in like a few days, and it's kind of got, so this would be one that I would probably not be as interested in. And it could trigger in and it could work fine, but obviously, we want to be kind of selective and keep your eye on the stocks that look like they have the most potential. Booz Allen, huh? It's kind of interesting, not particularly exciting as far as the Oh, and the other thing is that the first one I looked at, the ZS, okay, it's got 4.7% ATR based on the monthly, whereas this one I just said I didn't like, the NEO's got 3.5% average range. This BAH, which is not particularly exciting as far as what I'm seeing on the chart at the moment, 2% average range, and so you could expect this to be relatively dull, even if it triggers in. So let's keep going down the list here. This one looks a little bit better. This is kind of, there was a trade in this, and I hate to delete these off the chart because I like to look back, but this is like a completely different setup than it was last time, and so it's a little bit more constructive actually this time. It's forming the patterns sort of, in this market sometimes you turn the corner. Well, this one actually turned the corner, triggered in, ripped higher, and that was just sort of a couple of day phenomenon. It ended up chopping back down. So this is actually pretty decent pattern. So this time is potentially setting up in like a much bigger sort of wedge here, and so I'll leave all this on here, but this could potentially trigger again and make a monster move like that. So that's worth watching. This has been a super hot stock here, and just basically, had a blow off top. So you can see um, back here, really nice trade in this back in the spring. Triggered in here, and look how long it was open. It was open all the way up to here. Just plowed right through the target. Just kept going, then finally got knocked out. It's interesting. It finally got knocked out on one of those on like one of those weird days, because the trailing stop, tends to tighten up, tighten up, tighten up, and then you had that big intraday move down that like erased, week and a half's worth of gains, but then it just turned right back around and kept going. But anyway, long story short, this is enough of a sell-off that it's going to hit the pending list and start to get interesting again. Ideally, again, you'd see it spend some time sort of bottoming out, and if you looked at like my chart with not the RSI, but well, any of these charts really. Ideally, you'd want to see this sort of bottom out, and take its time and see that MACD kind of, as it trades sort of sideways to up, you want to see that MACD start to come back up towards the zero line, and then trigger, somewhere. Let's see what else I got here. Oh, look at that. you know, you'd want to see it like sort of base out and break back above the 50-day and all that good stuff. And I usually like to keep my charts really simple. I think this is the one I was looking for right here. So you'd want to see that MACD sort of materialize as the stock is basing out. And right now, the trigger price is like way up here. And so theoretically, if it well, I should say theoretically, but ideally, if it did everything that we wanted it to do, as a perfect example, then this would come down and meet trigger price would come down and like meet the price out here in the future, right? From like here, and then you'd get something like that. So the market does, the market typically doesn't do what we want it to do, but that would be, and at the same time, it'd be breaking right at the 50-day moving average would be right here, and the stock would sort of base out, and that MACD would start to come up towards the zero line, and then you'd get that day where MACD goes positive, closes right above the 50-day, triggers us in, and then forms that big cup and continues its its move up. So, but I mean, anyway, it's just kind of a demonstration of how that's supposed to work. And this has been an extremely hot stock here. I forget, a couple weeks ago, this big blow off sort of top or whatever, that may have been earnings. That may have been the big blow off top in the Nasdaq. I forget, but anyway. And then I'm going through the pending list now, right? So DOCU. I'm gonna jam through the rest of these real quick. Um, some good quality names on here. So Microsoft's the next one, right? Interestingly enough, those of you that have been around for a while know that these marks here, these were the when the market sold off and we created the recovery watch list, Microsoft triggered in like somewhere over in this area, and these were the two targets, right? Those targets don't even look like anything now, but at the time, I mean, at the time you'd scratch your head and say, geez, how's this thing gonna, recover all the way back to there? And so the funny thing is that if you look at like the recovery watch list or whatever, if you look at the recovery watch list and kind of go down it and look at the trigger dates, this may have triggered in, closer to here. But anyway, it says, 3 to 6 months is sort of what we expected when we created that recovery watch list. And some of these things, I mean, they just turned right around and hit those targets like it was nothing. So that was kind of unexpected, but anyway, what my point is that Microsoft, after this little sort of dip here, could potentially be setting up, and be interesting to see if it does trigger in. It's still got a little work to do. Quality names, that's what I was talking about. AMD too. AMD's been you can see back here there was the recovery targets on AMD, but yes, had this huge run up and then kind of this blow off top or whatever, and so it's got a little work to do, in my opinion, to set up, but you never know. I mean, sometimes, you get something like this and, it just turns right back around and rips higher. So, let's see here. CENTA. A really nice trade in this one, back over here, and it's setting up again. This is actually kind of a nice pattern right here. I don't remember what that was. So I'm gonna take it off. So sometimes, I like to just clean everything off my chart and start with sort of fresh eyes, because things that you have drawn on your chart can and will affect what your subconscious is seeing, at least with me, because I like to look for patterns. So sometimes my subconscious, I feel, gets tricked by stuff I have drawn on the charts, and that's why I have all these different tabs set up, because you know that some of these things like this is usually my go-to here, but it's very cluttered because I got 9 EMA and a 50-day moving average 200, and so I'll go through and with all these different looks here a lot of times on a stock I'm interested in, and this is my RSI chart, where basically I'm more focused on what the RSI is doing compared to the price. This is another good one, candlestick chart, 20-day, 50-day, and the Bollinger's on there. But Anyway, so when I'm generally speaking, when I'm evaluating, a stock sort of from, right off the bat, I kind of prefer this real clean chart with no moving averages, no indicators on it, and and that way it makes it a little easier to spot the pattern. So this one has a pretty good look to it. Um, as I recall, this one, let's see what happened here. This one never hit the trailing stop. It basically got closed over earnings, which was probably like over here. So moving on, GDOT. That's not really huh. That's kind of things have been kind of trading sideways here. I guess this is enough of a pullback. Not particularly fascinating as far as that chart pattern either. So I'm almost done with the pending list here. QGEN. Well, that's yeah. I'm not going to belabor this, but we talked about this last week, and that's what all those crazy marks were on the chart was where ideally it was going to pull all the way back to here and trigger in like this, but you can see that's not really what's happening. And then you can see the prior swing trade we had on there. Actually, two of them. This is as gappy as this thing is. It's a foreign stock. That's what the NV is about, right? It's a European company, but it tends to trade really gappy and kind of crazy and all over the map. And this sell off and then this little pattern that's sort of happening right now is very odd looking. So to me, it looks like a big head and shoulders here. So not too exciting. Nothing too exciting about that one. Although it's we've had a couple good trades in the past. Maybe so here's Etsy, and Etsy was an example. I guess I was talking about last week. Um, the original trigger was up here at 130, and I guess last week the trigger had moved down to here, and so as of right now, um, the trigger is. I'll just mark that. This is the last one too, by the way. So trigger 118.50. So there we go. So let me see how accurate this is. 118. Yeah, it's right about. That's right about where it is. So you can see that the range is kind of like really sort of tightened up here, right? It's kind of interesting. Like these ranges are tightening up, which is ideal. That's ideal, right? And so when this first hit the list, the pending list back here, the trigger was like way up here, and then so as the prices continue to consolidate, this trigger's come down, and then at some point, it's going to turn the corner theoretically. I mean, it could drop out of the bottom of this and fall off the list, but this is setting up really nicely. Let me get that off of there. And so theoretically, it's going to consolidate in this little box, and I keep talking about ideally, but at some point, let's see if I can't really even grab that. I can't even grab that trend line, but there's a few ways to draw this. You kind of draw a steep one. I could draw one just like across those two highs. Sometimes it's what I call like the benefit of the doubt trend line. Anyway, you can kind of see what's happening here. And so if this thing were to sort of base out and trade sideways and come up, it could theoretically, trigger in on a trend line break. Seems to me that it's probably that looks about right. So this trigger could come in a couple of bucks, right? To say like, 115 and trigger out here, next week. That'd be perfect. So The market doesn't always do what you want it to do, but this is setting up really nicely, basically. Setting up real nice. So if it were to continue to, I don't know why I drew that so big. If it were to continue to consolidate in that box, say, and I think I had the box bigger because obviously to allow for some, to allow for some up and down price action. If it continued to consolidate in that box and then like I said, theoretically, you'd get this is like the theoretical, breakout of the stock that goes through the trigger and then, goes on its merry way to, resume the primary uptrend. So there you go. Anyway, so that's it. That's it. 4 open trades, a really nice little sort of bevy of pending trades. I'd say that this is probably one of my favorites as far as the setup goes. Another reason is because of the nice sort of long duration of this pullback. Sometimes stocks they like dip down real quick and then they just turn right back around. Actually, this is a nice was a nice consolidation right there. So, but you know what I'm talking about. Like the stock will dip in just a couple of days and then just turn right back around. And so, but these longer duration pullbacks like this tend to set it up for um, an even better move, on a breakout trend resumption, whatever you want to call it. So anyway, so keep your eye on that and realize the big takeaway from today and last week is when a stock first hits the pending trades list, the trigger price is typically going to be, something like a head scratcher. But the idea is that it's hitting the pending list early with the idea that it's going to trigger in sort of properly as the trigger price comes down to meet it during consolidation. So this is the best example I got. So anyway, that's it. Thanks for tuning in, and I will see you back here same time next week.